Canada's housing market finally flips. Sellers surge as buyers retreat. This housing market flip is signaling a shift in overall market sentiment. In recent developments within Canada's housing market, a noteworthy resurgence of seller activity has taken center stage, leading to an increase in new listings. According to data presented by RBC economists Robert Hogue and Rachel Battaglia, July saw a 5.6% surge in new listings compared to the previous month, marking a substantial 24% uptick since April. This dramatic reversal of the declines witnessed earlier in the year has prompted economists to speculate about the underlying reasons behind this sudden boost in listings and its implications for the housing market. One interpretation of this swift rise in new listings is that investors might be strategically timing their market entries, capitalizing on perceived opportunities arising from evolving market dynamics. Another possible factor contributing to the surge in new listings is homeowners seeking to capitalize on the market's current conditions by selling their properties to avoid the mounting costs associated with higher mortgage rates and inevitable housing price declines, sometimes referred to as anticipatory selling. While the precise motivations driving these changes will become clearer in the coming months, it's evident that this surge in new listings is the most rapid outside the context of pandemic-related factors, thereby signaling a shift in overall market sentiment. Analyzing regional variations, specific markets have witnessed particularly striking increases in new listings. For instance, Saguenay in Quebec experienced an impressive surge of over 28%, while Kitchener-Waterloo in Ontario saw a substantial rise of 21%. Similarly, London, Ontario, observed an almost 20% increase in listings. However, economists at RBC cautioned that these seemingly substantial increments are being measured against exceptionally low starting levels, implying a nuanced perspective is required to fully interpret the market dynamics. In contrast to the buoyant seller activity, potential homebuyers appear to be displaying a degree of hesitation in the current market landscape. Nationally, home sales saw a modest 0.7% decline in July compared to the previous month, signifying the first instance of decline in 6 months. The driving force behind this pullback in buyer activity can be attributed to the Bank of Canada's resumption of rate hikes, which have led to an escalation in mortgage costs, with the average 5-year fixed mortgage rate reaching a post-financial crisis high of 5.84%, and the average variable rate nearing 7%. Potential homebuyers are understandably exhibiting restraint. This buyer hesitance was reflected in markets like the Fraser Valley in British Columbia and Toronto, where sales experienced declines of 11% and 8.7%, respectively. However, the market landscape in other regions of Ontario painted a different picture. More affordable markets in the province, such as London, Niagara, and Windsor, recorded increased sales activity. The positive trend wasn't limited to Ontario, sales also witnessed an upward trajectory in Quebec, the Prairie provinces, and specific parts of Atlantic Canada. Despite the ebb and flow of buyer interest and seller activity, the consistent upward trajectory of housing prices continues to persist in most regions. Notably, the MLS Home Price Index registered a 1.1% increase nationally from the previous month. However, this increase marks a slowdown from the average 1.9% rate observed over the preceding 3 months. This moderated pace of price growth suggests a potential balancing act between supply and demand dynamics. In light of these shifting dynamics, it's becoming increasingly evident that Canada's housing market is poised for further transformations. The robust rebound observed during the spring appears to be waning, as the market grapples with the re-emergence of higher interest rates. RBC economists express the anticipation of a bumpy road ahead for the housing market, largely influenced by the enduring impact of rising interest rates. This influence is expected to temper buyers' enthusiasm in the coming months, while potentially prompting existing homeowners to reevaluate their positions and potentially consider selling. As the housing market navigates these intricate dynamics, the interplay between seller activity, buyer sentiment, and price movements will continue to shape the narrative of Canada's housing landscape in the months to come. The strategy of anticipatory selling is starting to emerge in the Canadian housing market, driven by a complex interplay of economic factors and uncertainties. Homeowners, especially those that are becoming financially stressed due to their mortgage payment increases, are increasingly considering the strategy of selling their properties ahead of potential market declines to secure their financial futures. Recent news articles shed light on specific circumstances that underline why this trend is gaining momentum. In what follows, we'll reference some of these news articles which provide some valuable insights as to why this strategy of anticipatory selling is being accepted and applied by more and more homeowners. Canada's real estate correction is far from over. Oxford Economics, BetterDwelling.com, August 4, 2023. According to an article published on Better Dwelling on August 4, 2023, Oxford Economics, a prominent macroeconomics firm, predicts that Canada's ongoing real estate correction is far from over. Despite a temporary interruption, the correction, which saw a brief pause after the central bank's intervention, is expected to continue and last well into the next year. According to Tony Stillo, Director of Canada Economics at Oxford Economics, the firm's latest forecast indicates that the correction is only halfway through its course, with another 10% drop in home prices projected by the first half of 2024. The article highlights that the earlier rapid rebound in Canadian home prices might not repeat this time. Barrie-area woman watches mortgage payments go from $2,850 per month to the staggering sum of $6,200 per month. Forced to sell, Barrie Advance, August 3, 2023. In an article published on August 3, 2023, by the Barrie Advance, Cora Cook, a resident of Barrie-area, is compelled to put her dream home up for sale due to a significant increase in her variable rate mortgage payments. Cook and her family moved into their Springwater home in January 2022. But their mortgage payments surged from $2,850 per month to the staggering sum of $6,200 per month, pressuring them to sell. The Bank of Canada's recent hike in the overnight lending rate to 5% from 0.25% over a year and a half ago has left Canadian mortgage holders, including those in Barrie and Simcoe County, facing financial difficulties. Cook's story highlights the challenges faced by variable rate mortgage holders, leading to difficult decisions such as selling their homes. OSFI preparing stricter capital requirements for some negative amortization mortgages, Financial Post, July 11, 2023. Published on July 11, 2023. In the Financial Post, the article reports that the Office of the Superintendent of Financial Institutions, OSFI, Canada's federal banking regulator, is planning to impose stricter capital requirements on certain mortgages with negative amortization features. The move is prompted by rising interest rates and the popularity of variable-rate fixed-payment mortgages, which have led to an increasing number of mortgage holders facing negative amortization, where loan balances grow over time. To address the risks associated with these mortgages, OSFI intends to require banks to hold more capital for loans where the loan-to-value ratio is above 65%. OSFI's focus on stricter capital requirements for these mortgages reflects concerns about potential risks for both lenders and borrowers in a rising interest rate environment. The changes proposed by OSFI are open to industry feedback until September 1, 2023. Toronto home prices fall for second straight month in July, Reuters News, August 3, 2023. Published on August 3, 2023. By Reuters. The article reveals that home prices in the Greater Toronto Area, GTA, experienced a second consecutive monthly decline in July, alongside a nearly 30% drop in home sales. The decrease in prices and sales is attributed to the Bank of Canada's ongoing series of interest rate hikes. According to Toronto Regional Real Estate Board, TRREB, data, the average price of a home in the GTA fell by 5.4% in July compared to June, reaching $1,118,374. Concurrently, the number of home sales decreased by 29.7%. TRREB's president, Paul Barron, noted that the sales momentum seen earlier in the spring had stalled due to the Bank of Canada's resumption of rate tightening activities in June. Please join in on the conversation by leaving a comment. If you found this video and information useful, please smash the subscribe button and hit the notification bell so we can keep providing you with timely information you can apply on a daily basis.